Hello and welcome to Wake Up and Smell the Mic Q's review for Monday, June 26th, 2023. It's now the 24th. And since technology will make or break the wallets of traders and investors, we'll stick with it until it comes back under the exosphere, and we'll switch back over to the S&P review then, but the Qs are almost exactly the same as the S&P 500 as far as indicators are concerned, except the S&P has printed no 13s in the current area. I'll zoom into the current area now, and there's still a chance to get all of the risk levels qualified for Monday, but realistically it will be these two risk levels with a close above this close end of day Monday the 26th. And if the close is above any of these upper risk levels, they will become qualified too, but realistically it's these two. And these two risk levels have been halfway decent support. So if it breaks this bottom one, it's the same story. It could be a shorting opportunity, but it won't go that far, as there should be really good support here, as the mid band of the Stark bands is there, the channel 3 low, and a qualified demand projection at 356.61. But if it does break under there on some terrible news, there is an ongoing demand line at 350.20, but these two should hold it between the channel 3 low and the lower Stark band. And this disqualified momentum down for 50% and 100% is not in danger of becoming qualified. However, there is the 20 simple moving average here at that level, 357.22. So that adds to the support that we just looked at. And the cloud baseline is at 349.95, and that adds to the support at the ongoing demand line that we just looked at. And the ATM fast trigger made it below the oversold 25 line. So as you can see, it doesn't spend much time around there before it heads back up. And the slow trigger for ATM is well above the overbought 75 here, so that's still in good shape. If the slow trigger moves below that overbought, then we can rethink things, and that's going to be a little bit of an ominous sign, but I don't believe so. I think it's just going to stay cruising above there with support at the levels we just looked at. And there was a well-deserved ATM exhaustion alert printed back here on the 20th, and that usually takes a couple days before it takes effect, sometimes 3 days, but you can see after the second day we had a bit of a downdraft. And this is the 4-9-18 rainbow. The 4 is blue, the 9 is red, and the 18 is gold. You could see the 4 went under the 9 a little bit, and that's a normal thing to see on a pullback. And price could hit this 18 down here, 358.68, and bounce off of that. And that also coincides with some of the higher support levels we just looked at. It could make it below it down to the 350 area, and then there's still good support down there as we've seen. And the REI, DeMarker 1 and RAC is setting up nicely for the second buy. You can see the REI went under, it's oversold, so it's been down there for 2 days. The DM1 is still above its overbought 60 line, and rock is just kind of porpoising around its overbought line, so that's in good shape. So now we're going to wait for REI to make it back above the oversold line within 5 days before it prints a region, such as it did back here. This is for the downside though. So we do not want one of these to print down here. It needs to make it back above that oversold line in 5 days and be either going sideways or in a slight uptrend. If this goes into a strong downtrend and REI makes it back above the oversold line within 5 days, that means it's going to seek neutral 0, and then we wait to see what happens there and not buy on this signal when it goes back above it. And I'm somewhat surprised as the ADX quickly put a down trajectory on itself there. Just on these 5 bars or so here, it is pointed downwards a little bit, and that does not indicate a downtrend. That just means the strength of the uptrend is not as strong as it was before. When this gets under 20, then we worry. So it's got a long way to go to 20, and the DMI plus is still well above the DMI minus, and they're both headed in the same direction, so that's not too bad either. If the DMI minus was headed up and the DMI plus was headed down, then that would be a little more concerning, as they would eventually meet and form a pincher somewhere here, but nothing to worry about there right now. So I'll keep an eye on this REI and let the world know when that goes back above its oversold line here and what the status is with the uptrend or downtrend. And the psychological line is still above 50, so there are still buyers, and the Williams percent R has fallen nicely below the overbought negative 20 and is just kind of going sideways, so that's good to see. Hopefully this is a pause that refreshes. And the Williams volatility trend stop is right around that support we were looking at, 348.18. So 350 is a level to definitely keep an eye on. And the short-term KST is still above 0 at 2.07. It's below its signal line, so it needs to get back above that. And the intermediate term KST fell below its signal line a little, and as I've pointed out, that went back above it way back here on May 15th, so that's a little bit concerning. However, it's still well above 0 and has plenty of time and space to rectify that. And the long-term KST is still sailing up and to the right here, well above its signal line, so not too concerning.